The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Federal Reserve's at it again. They go in and they make another massive purchase of bonds again today. I'm not talking about QE, okay? I'm talking about literally just another pump. They go in and they buy $16.6 billion on top of the $85 billion that they've already purchased, putting them over the $50 billion mark of on. We're going into like $130 billion for the month. So I don't know how fast they can go, but they seem to be pushing it. We got $16.6 billion today. They had $9.4 billion yesterday, $6.2 billion the day before. Okay, day before that, they go and they do $12.2 billion. And day before that, they go into $11.8 billion. And so they decided to go ahead and top off the week with a whole bunch of extra. And let's look at the chart. Remember I said right around 10:15, these things start happening, and then they close out around 11:45. Look at the chart. Look at 10:15. Let's go. We'll go right down to 5 minutes for you, okay? And this isn't necessarily going to make the market fly up. This is about propping it in the middle of everything that's going on. And right there, 10:05, 10:10, boom, 10:15. Prop in effect, keep the thing from crashing. So Operation Don't Crash the Market, I guess, is well in effect, because the thing should have just kept going. And that should have been happening every day. And so they're just trying to slow down this drop. Trying to slow it down. And every once in a while they get in there and they get a nice pump with it. But they're just trying to slow it down. If it's going down, slow it down. If it's going up, give it a little acceleration boost. But just amazing that we're having this day after day after day. And again, this is day after day after day this week. Okay? Look at these dates right here. We got the 27th, we got the 26th, we have the 25th, we have the 24th, we have the 23rd. We haven't had them for a month before that. When we did, we had it on the 20th, 19th, 14th, 13th, 9th, and 7th. And then, we don't have them at all in July. We only have them 2 times in June. We only have them 3 times in April, and they're small. Look at this. I mean, there's not even like a billion, okay? And then before April, we didn't even have them, but for a couple times there in January. And then like once in December, once in November, and last September. Let's see, how many did they do last September? Let's check it out. We got 1, 2, 3, all of last September combined, like $7 billion. Well, they over doubled that today. But usually you're getting like maybe 1 or 2 of these a month at most, okay? Now, we're getting, every single day this week, they've been pumping money in, and they actually put their largest amount in today. So they are doing everything they can to prop this puppy up. And we'll see if they can push it back to settlement. I don't know. Everything seems to be pretty dead at the moment. So I hope they do. I got a couple gap fill trades on I'm watching. We'll see. They're just sort of oscillating. They're up a little, down a little, up a little. I think they're actually flat right now overall across the board. So I put these on this morning on the Diagnostic Trading Hour. They're the Bull Bear Binary Hour with Tommy O'Brien and Steve Rhodes, and we got them on. And yeah, see, I'm up 10 on 10 contracts. I'm down $10 on 10 contracts. So to sort of watching right now, and it literally just oscillating up and down. We'll see if it can make a break here into the end of the day. But let's go ahead. Let's look at it all. What do we got? We got the S&P down 7 points with the NASDAQ up 0.75. Russell's down 4.7 with the Dow down 69 points on the day. Gold currently up 13, almost 14 points on the day. We got silver pretty flat at 0.2%. We have copper up 0.57. Oil is currently down 33 cents with natural gas pretty flat on the day as well. Corn down $1.75. We got soybeans up $4.75. Euro dollars up 33 pips. Pound dollars up 78. Aussie dollars down 51. Euro yen's down 58 with US yen down 63 and pound yen up 11. Dollar CAD is currently down 9 pips with dollar franc being currently down 45 pips on the day. So that gives us our current market wrap. Let's go ahead. We'll check out a few markets on their deviations. Maybe even look over at like maybe a gold market. We may check that out. See if we see anything that might be tradable. Looks like a lot has been just sucked out of the gold market right now. It had just a big boost and then nothing. So really, really flat right now on the day. Great butterfly day, by the way. So if you don't know what butterflies are, you may check some of my archives out. We go and we buy below, sell above. But really just let's see if I see anything on the market for gold that might even be potentially a trade. And we got the thing at 1338 right now. So you could get like a 1336. That's not horrible. But you still got about 17 minutes on the clock. So we'll have to hold off on that one at the second. But let's see here. I'll go in and what I do is I set the risk to 65 to 95 right there. And then I bring it on down to 30 minutes. We're scrolling down here. It'll show us the dailies and weeklies. No dailies that are no weeklies that are qualifying right now, but we do have the dailies that are qualifying at the moment. And basically we have a 1339 to 1336. And so if I go over and set this like right up here just so you can see a little bit of each. But at 1339, I mean, we're talking a point to the upside. So that one's pretty close. 1336, at least you got a couple points to the downside. And that gives you a decent range right there. It's probably, out of all of them, probably one of the best trades. But it is $17 with 17 minutes. But I do like the fact that it is basically 2 points away. So it has its advantages. But just be ready if you do decide to hop in on that trade right there that you do get out if it hits the strike. Okay? So usually we go in and we start looking at those last 10 minutes. I don't know if we're going to have the implied volatility built into this thing in the last 10 minutes. But that would be the definite trade that you'd probably want to be focusing on if you like to trade the premium collection at the moment, just because it's a price that hasn't been hit since basically the entire morning. So it had to be going back down and really touching the morning lows there. It's like about 9:45. It's about how far back it'd have to go. It'd have to go back to hit those price levels. So that gives it a little nice, I guess you could say, level of security. So obviously there's always risk in everything, but that gives you just a sort of a hint of ability to go in and maybe, like I said, take advantage of the trade right there. And the way that you do it is you'd pop it up. I'll open the contract for you. I'll show you how it looks. You go to commodities, binaries, you go to gold, you're going to go to daily, and then what you're going to do is you're going to open up that 1336 like this right here. Okay? And let's see if it's sharing. There we go. Got that sharing on the screen for you. And you just click the price, choose the quantity, and when you're ready, you put the trade. So let's say if I put one on right here, okay? And then what I want to do is I want to have a stop loss ready. So I'm going to flip that around to a sell. I'm going to put in $40 right there. I'm going to pin this thing to the top of my chart so I don't lose it and have it right up there. And what I'll do over here is also I can, mark on the chart sort of where that price level is. So that way I can keep an eye on it. You can also use what's called price alerts. Most platforms have some sort of price alert to alert you. But you just want to be ready to hit that button and exit if necessary. But again, that's basically by buying the 1336, what we're saying is that the market will stay at or above 1336 for the next 17 minutes. If it goes up, we're profitable. If it stays flat, we're profitable. If it moves down but doesn't really move down more than 2 points, then we're profitable on the trade. If it does move down at 2 points, you could stay in and hold to expiration, but it's really not a wise idea because it'd be really bad at risk reward. So you'd be better off going in and just getting out of the trade if it hits the strike. And it's a lot easier to make back in a couple trades that money than it's been like 6 trades making it back. So risk management is key. Put the probability in your favor, but also put the profitability in your favor by keeping that risk management in check. Okay, so that sort of lines up a nice little EPC trade for us. We got that one going. And let's see what else we got over here that we might be able to do and take advantage of. I'm trying to see if there's just a couple more things. And let's see what we got. Okay, right here. What I'll do is we'll just do this quick scroll through on everything. I got that up on another screen, so we can look at where all the markets are right now and how they're trading. So we got the Aussie dollar right now. It went down basically right to one deviation. It's pulled on back up to 0.5 right there. We got the euro dollar is currently sitting actually right up to one deviation. Look at that again, a perfect call. So that's what we use these for. Remember, there's they're not only a target, but they're a perfect means. What my favorite use of the deviations actually is as a trailing stop. So now there are a lot of ways to trade, pivots and fibs and on down the list. My favorite way is actually a trailing stop. So when I see the bar close above it, I'll trail my stop. And that way, because I know that as it hits each deviation level, it's a high probability, like pivot level, and that the market easily reverse back. And so it's a point where I do want to go ahead and protect my profits. Not necessarily lock them in just by getting out, but at least tighten my stop to protect the profits. And then we'll go on ahead and let's check out the pound dollar. So on the pound dollar over here, looks like right now went on up perfectly. They got a big spike last night. Look at that, man. Look at that move. So 6040 spikes up and basically settles right at one deviation. This goes flies right up there, comes back right up to the one deviation mark, pulls back down to about a half, goes right back up, bouncing off of one deviation, 0.7, and really just settling and hanging out right around one deviation the entire time. So some, like I said, some very big, that's just a massive move right there. So we got to move from 6040 to 6130. It's about 90 pips off of that. And it wasn't so much like just a fundamental news driven on that move. People go, what happened with that, and how could I take advantage of that? And they had their API, their nationwide API, but that didn't come until 2 a.m. Okay, so what happened at 1 o'clock? There's several things that came out, but one of the things was that Carney came out and he said that he doesn't really think there needs to be more QE. Now, I don't know if that got leaked earlier on that statement. But he said there doesn't need to be more QE, which means a stronger pound. Okay, and we saw the pound dollar just do that massive surge all the way up to 61.35, and basically it was a quote that he made, and the quote was in an interview that the Yorkshire Post newspaper did, and he said he would consider a stimulus should the United Kingdom's recovery falter, but his personal view is given that the recovery has strengthened and broadened, I don't see a case for QE, and I have not supported it. So, sort of a strange quote, but one that definitely gave a big surge when it got out, that this big move right here on the pound. But again, that expectation, that would have helped you, right? Because you got that move up to the one deviation, and it right where the market expected it. The market's going to move. That's pretty much how far it expects it to move. And so that is very helpful for you to know as a trader, so that way you don't have false over the top expectations. Let's go ahead and let's check out where dollar CAD's at right now. Dollar CAD had a bit move down, but hasn't really been popping on any side of the deviation levels all night. And really haven't seen just a major move. It's just been sort of in an oscillation territory, really between about 1.030 and 1.0330. And looks like it's moving on back up towards its settlement price as well, which is only about 8 ticks for it. So we'll stay right there. We'll be right back. Let's check out the other markets and look at our news plan for next week. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come back here to the Diagnostic Trading Hour. And I was looking, and I was just sort of searching temporary market operations, and found something that was a little bit interesting. I found a article, and I'm going to go back, and we're working on pulling all these stats. But it looks like the last time this happened was August of 2007, where they actually were doing this kind of purchase. The Federal Reserve injected $38 billion into the economy via temporary open market operations this past Friday. That was August 10th, and 30 billion, right? So 38 billion. So back in 2001, the Fed purchased the Treasuries exceeded 30 billion for the 4 consecutive days after the collapse of the World Trade Towers. So they did this right after the World Trade Towers. They exceeded 30 billion. They did this in August of 2007, right as it all came back, right as everything started happening. The turnover went into effect. And let me see if I can pull up something on here. But if we go in, and I'm going to get rid of the deviations for a second. And we're going to pull up the S&P 500 index. We're going to flip over to daily. And then make this maybe actually weekly. And let's pull this up. See what we get. And need to get a little more data in there. Okay, so we'll see if it'll give me far enough back on this platform. If not, then I can always pull TOS. There we go. So here we go. We got July, August. Okay, check this out. This happened, remember? When was the last time they did this kind of volume? August 2007. Okay? And more specifically, about August 10th. So if we go over here, we're looking at this. Market starts crashing down right here. They inject $38 billion in temporary market operations. We get a pump up for about 2 months off of that. Okay, now they've done $50 billion this week. That was $30 billion. And so we get about a 2-month run. Maybe a month. We'll see. It goes to about 2 months. So about October. And it's right at the peak when this happens. Sound familiar? And then, bam. And this might be one of the best signs we have for Tommy's been talking about it. I've been talking about it. We've been looking. We're like, this thing, we're going to keep, as long as it keeps going up, we'll keep buying. Because we're ready to hop out and ride this puppy down any chance we get. But this may be the clearest thing we actually have for actually seeing, because the Fed's seeing, in advance what's really happening. And this is just a massive surplus. So it's just, it's really interesting. I'm digging more and more into this to see what else I can find. But, I was really shocked when I went back and I started looking. I'm like, when's the last time they did like a 30-something billion dollars in a matter of, just a few, a day or two. And this is beyond that. They've been doing it not just, a day or two, but they've been doing it over and over and over again. And so to actually see this coming up like it is now, right when, the market just seems to be like begging to, turn over, right when Congress is coming to, a head, when this whole thing's coming up, when they're trying to pump away. You got one economy saying, oh, things are fine. The other one is crashing down. To have, go from 40 to 50 billion, 56 billion in a day, 16 billion right there, and have that happen every single day this week, might be a cause for concern, you think? So if we go back, let's just back this chart out and really zoom it out and look at it. Well, when did this happen? It happened right here. Okay, let me give you a nice big arrow. So right here, they did a pump. Okay, they pumped 30 billion in. What happened? Market had a nice little run on it. Well, they've been doing that basically this week. Okay, they've been doing a little pump going on. Okay, they also did it in August. Of course, we know that. Talked about that already. And that's sort of, we're seeing that effect of that right now, where they're going in and, doing this pump on this August right here. And let's see if I go into the details. We got, August, like 19th, basically 13th, 14th. They got really big on the 19th and 20th. They started pumping up to like 5 billion. So right in the middle of August, we started seeing that pump. Right as the market was coming back down, they put another pump right in there. But the thing that concerns me is the volume being what it was back when they did it at the same time. Back in August 2007, we got that 2-month pump off of it, and then just bam. All right, stay there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so we're back here to the Diagnostic Trading Hour. So we got the Fed trying to move the problem from one sector to another sector to another sector, and now they're going to the repo market. Talking about trying to get the repos under control, and they go out of control on purchasing repos. Last time we saw temporary market operations of this size and this short of a time frame, again, was back in 2007, right before the final top in the market. Okay, again, right before the final top in the market. And then now we're seeing it again. Now this time they're not buying mortgage-backed securities. So think about this. Back then, and I put an article up there. It was when they were actually going in and buying a massive amount of mortgage-backed securities right before the financial crisis. Like they were trying to hold this thing off, and boom, it bust, and the market drops from 1,600 all the way down to 7. Okay, and market has now hit those same highs on a big QE splurge that started in 2009, and just been getting bigger and bigger, trying and harder to push the thing up. And so now we got the market where it is, and they're doing the same thing again. So they did $15 billion in August, but they actually did over $50 billion this week, $56 billion this week, twice what they did back in 2007, right before the crash. So I'm not saying go all in and go all short. What I am saying is be very diligent. Be very risk management aware. If you start seeing this thing turn around, be ready to write it down. So anyways, I love the volatility. I welcome the volatility. I don't welcome, them destroying people's accounts. But you know what? You're going to be in the market. You might as well be making money in the market. And you need to do so with capped and defined risk management. By the way, back on over real quick. Let's take this back on down to market we were at a few minutes ago. We got gold right on over here. And our little binary right there had 5 in and just expired profitable. So I got a nice little payout on that. And some easy money. Market wasn't doing anything. And one of the traders was like, hey, man, gold is flat today. It's great for premium collection. And just going in and grabbing some cash there. And what happens is once you do these trades, when they settle out, if you hold them to expiration, which is what I did, then what it'll do is, actually I had 6 contracts on. But so I had 6 contracts on, and I got in on them, and basically what happened was they all settled out, got a payout amount of 600. So risk return plus profit there. And so not too bad for doing a trade for about 15 minutes. Boom, done, in the pocket, enjoy it for the day. And again, that's just saying, hey, gold's flat right now. It's not going anywhere. It hasn't went anywhere since 9 a.m. And if I can say it's going to stay just above 13.36, you could have actually done a butterfly. I brought in like another $30 on top of the thing. But I didn't go that far. I didn't get that deep into it. I just stuck with the simple directional. I prefer the directional plays when doing the premium collection. But just a nice, simple, easy premium collection trade, and brought it in right there and brought in some cash. And those are live trades right here on TFNN. So I try to do at least 4 of those a week for you, so you can see how I do them and see them done with real money. So it's the real deal. Okay, so again, how do you get involved in doing something like this? How can you go in and sit down and make money in 15 minutes? Okay, whether it be in the middle of the afternoon, like now, like during your lunch hour, or whether it be, in the evening, or maybe in the early morning, you get up. You can do trades like this. You can trade the DAX and the FTSE. They have early morning. People ignore those all the time. And so you go over here, check this out. We go to like stock indices. And this is one that people a lot of times will ignore. But again, you got the FTSE and the DAX. And let's go down to international. Okay. And they got expirations happening like at 5 a.m., 6 a.m., 7 a.m., 8 a.m. Think you might be able to do a couple of these trades maybe before work? Hop in for 15 minutes? That's something that you could do, okay? Think you might be able to do a few in the evening. They have like 7 p.m., 11 p.m. You also got the Nikkei is expiring at 2:25 a.m. depending upon where you're at in the world. Maybe over in California, well, that's not too late for you. So maybe that's like 11 o'clock. So you got all the 11 o'clock Forex binaries. You got the... I guess what would that be, like around 10:30 or 11:30 right over there in Cali? So I'm not perfect with the time zone differences, but I think that's pretty close, 10:30, 11:30. So that you could do like the Nikkei expirations. So, or again, hop up in the morning. Maybe you're on the East Coast, maybe Central, whatever, and you want to do a few trades before you go to work. Well, there's some easy trades that only take 10 or 15 minutes. That's that premium collection trades that I do, like we just did on gold, saying it can expire above a price when it's already above the price. It's just got to stay above the price. Keep going up, stay flat, go down a little, we still make money. So if you want to get into that, you want to figure out sort of how this works, you want to use the scanner to help you because it makes it a lot easier, then go on over to TFNN.com, click on Nadex, and then demo trade this first, okay? Just hop it over, click on Demo Trading Account, fill in your username, your first name, last name, phone number, and email address. And if you need to know how to get that demo extended, just email me here at dmartin@tfnn.com. I'll be glad to help you out. But just fill in that, username, first name, last name, phone number, email address. It takes 10 seconds. You'll get an email a few seconds later. You'll be able to fill it on out, and you'll be able to log right in. And then as soon as you log in, you can do live as well. How much is it for a live account? Just click Create Account. It's only $100 to fund a live account. Okay? So, now, of course, I'm going to fund it with more. You're probably going to fund it with more. But that's all it requires to fund it. And there's no day trading restrictions. There's no things getting assigned to you or called away from you. There's no making or taking delivery of an actual commodity. Everything is cash settled instantly at expiration. Within a few minutes, you're going to have your money right back in your account, and you can go on and you can take on the next trade. And there's 21 of these expirations that happen a day that you can take advantage of. Now, to get access to the box spread scanner right here on TFNN, just scroll on down. You'll see Diagnostic Box Spread Analyzer. Click on that big logo right there. Get access, 2-week free trial, but that'll let you into the scanner, which is the thing that I used just now to do the trade. So I pulled up a chart. I'm like, okay, let's see. We got the market right here. And then I went and I pulled up the scanner. And then real simple, I just said, okay, 65 to 95, 0 to 30 minutes, I want gold. And I scrolled on down, and it showed me what was there. Gold was the only contract that really met the requirement that I was looking for. So, and I had a buy and I had a sell. That's the only market I was looking at was gold. And I like, you know what? The sell might be okay, but it's only a point away. The buy was 2 points away, meaning the gold could move up, stay flat, or move down 2 points. I was going to be able to collect that premium. And, may not be huge. Maybe, $10, $15, $20. But collect that on 5 contracts. That's an easy $100. Now I know guys who do 100 contracts. I know guys who do 200, 300 contracts on these. So it all depends upon, what your account size is, what your trading style is, how many you're willing to do. I'm doing multiple ones throughout the day, so I break up my risk throughout the day to sort of, cross it across instead of getting it all in one. But whatever works for you, you can lay it out. But first, demo trade it. And you can demo and live trade with the scanner. Right up here, just click demo or live. And the scanner, it makes life so much easier because you're not doing the math. You're not clicking around on 20 different things to find one contract that's going to meet your requirement. There was only one buy that met my requirement. Why do I need to see the other 21 that are on the screen? Including the weeklies, you got another 19. So I got 40 contracts I got to look through, or could I just look at the one, hit a button, hit submit, and be done? And that's what the scanner is about, is making it as easy as possible for you to place these trades. All right. So let's go ahead. Let's check out a few more of the deviation levels and where we're at on everything. We knocked out a dollar CAD last. Let's go ahead and hop on dollar franc. Got to add my template back on there so we can see. All right. So dollar franc moved on down 1.5. Actually moved down to 1 deviation level before turning on around and moving on back up. So right now sort of sitting right around 0.7 and coming to a close here in the Forex pit soon. Going on over looking at dollar yen, and dollar yen moved on down to 0.5, 0.7, and it's trying to hit that 1 deviation. Not too far away from, only 10 ticks off of a full deviation move right there for dollar yen for the day. And if you go from high to low, you already got it. And that's one of the things I always stress that people sort of learn as they're looking at these, is don't just get caught up in the lines. The lines are important, okay? It makes it easy. It does the calculation from settlement. That's the technical deviation. But I can measure, okay, what's 1 deviation here? 83 ticks, and I can go from high to low. So right here, on down to the low right there. We just had the low there. Got 87. We've moved a deviation from high to low today. So we've had the expectation of movement on 7 out of 10 days has already taken place right there on the dollar yen. We go ahead, and with that, we got the dollar yen. We can go down, let's look at the S&P. Let's check out where it's at. It went on down to 0.5, really just hanging out right there. On down to 0.7, moved back up to 0.5. It really can't decide if it's going to go anywhere. Tommy really did call it this morning. He talked about 1687 as being his main target right there. It got up to 1686.75. So very nice call there right this morning on the Bull Bear binary hour. And so if you were doing the spreads and you're following along with the spread that Tommy chose, you got 1686.75. Went in, he got it to right around 9:30 or so. Or I guess that's about 10:05 because we start the show 10. Yeah, so about 10:05. It was right off at the beginning of the show. And basically he called that 5-point run up. And you could have taken that profit off and already booked it. So good trade, Tom. Let's go ahead and let's check out the Russell. We got the Russell right now. It moved on down to 0.5. Oscillated, tried to get to settlement. Didn't quite. Got close. Didn't fully fill the gap. I usually consider within 4 ticks of the gap that we got, or with 1 point. So 4 ticks on the S&P. Basically 1 point on, which would be 1 point on the S&P, 1 point on the NASDAQ. It'd be 10 ticks on the Dow, and of course that'd be 10 ticks on the Russell. And we did get within that 1 point, that 10 ticks on the Russell right there. So I would consider that a Russell gap fill. Okay, we haven't got it definitely on the S&P yet. If we go to the NASDAQ, we also got right there. Check this out. It actually did fill its gap, went 0.5, 0.7 all the way back up to settlement. It was the one that had a tough time yesterday. Today it's the one that it smacked right into settlement and then chilled out. So perfect gap fill on the NASDAQ. Dow's sort of hanging out with the S&P, hanging out right now right around the 0.5 deviation line. It moved a little bit further, almost got a full deviation out of the Dow in its down move today. So that was after that big jump. If you saw that last night, So the Dow shut down and reopened with a gap right on. I mean, a gap. This isn't a gap fill. Okay, this is a gap. So when we got that gap right there, Nike earnings. So Nike just got added to the Dow a couple weeks ago. They kicked Alcoa out, and they kicked out Bank of America, added in Goldman Sachs. And anyways, Nike got added into the Dow. Nike has a nice earnings report. Popped up the Dow. Gave a little umph right there. Wasn't enough to hold it up all throughout the next day, but it did give it that after-hours umph. And let's go ahead. Let's check out what we got going over on corn. So on corn right here, we got corn moving down literally to the tick at the half deviation level. Hits it, bounces right off of it. And let's go ahead and look at soybeans, see where we're at. On the soybean market, we move on up. We got to move up to half a deviation and within a tick of the deviation and pulling on back. So 2 half deviation moves on both the ags markets. And we can wrap up and look at oil. So on oil over here, what we got to move on up to half a deviation, pretty much move down half a deviation. So high to low, you basically got a 1 deviation move. And I bet if we measured it right to the tick, we'd be within like a tick or so of a perfect 1 deviation. Remember, 0.5 plus 0.5, even though it's a negative 0.5 there. 0.5, half a deviation up plus half a deviation down equals a deviation move. And so we don't really expect a whole lot more out of oil at this point in the day. Let's go ahead, and we got a couple more markets we can look at. That's most of them right there. We could look over at natural gas. I know it's rolling over, though, so I need to update that one. But we got to move down to 1 deviation perfect on natural gas. And we'll take maybe just one last look here at our broad market index. So we got the broad market index. It went ahead and gapped down. You see that massive gap down on the broad market. Did a run up. Wasn't quite able to fill that gap. Been flat pretty much all morning since the Fed pump right there at 10:15 went into effect, and just hasn't done anything yet. So we'll see if the broad market has enough umph to close out the week strong, or if anybody's going to be brave enough to try to push this thing up right into this, weekend congressional gridlock that's happening at the moment. So I'm sort of doubt that. All right, so let's go ahead. We'll pull up where the markets are right now. Let you check that out, and I'll throw the deviations on here as well. We just went through the deviations. These are posted every day at 10:15. Right here on TFNN on the Diagnostic Members area, you can get access to them, and I list them all out. Deviation, 0.5, negative 0.5, all the way down, and there's tutorials on how to use them, how to look at them, what they mean. You can plot these on your charts. Very, very helpful. You can just see as we just went through all these markets how accurate they are. We got them on the Nadex markets, we got them on the FX markets, we have them on the futures markets. So they cover a lot of different markets for you, and we show the current symbols and everything along with it. And you can even go over it, like say you use Thinkorswim, you want to plot them on there. We show you the Thinkorswim symbol as well, that it's mirroring for that deviation level. Just by highlighting right over it, it'll give you the Thinkorswim symbol. So if we put a slash in front of it, so / like CL, X3 or Z3. And that gets us caught up right there on our deviations. Let's go ahead and check out what news we got right around the corner here. So what is coming up next week that we can use to actually play with a little bit. So let's see here. We got tomorrow. New Zealand is switching to daylight savings time. That's not a big thing, but then we go on to Sunday. There's going to be some business confidence in New Zealand, and then there's some decent little reports over in the yen. Nothing major. Probably will cause a little bit of volatility on the yen and Aussie, giving you a little bit of movement. So if you are a Sunday night trader, I'm not. I'm taking the night off, of course, on Sunday nights. A little volatility there. Stay there. We'll come back and we'll get into what's coming up Monday through Friday so you can know what to expect. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position. Subscribers sold recently for plus 42% on parts and plus 64% on rest. Had Hertz Global as a core position for 6 months. A current position entered as a turnaround company is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. And one of the stocks that got brought up over in the room was NRF, and that's North Star Reality Finance Corp. And basically it was named the top dividend stock by Forbes, going in and getting an 8.63% yield. So pretty sweet, nice yield for a stock, and being paid out right there on it. And so I'll pull it up, and we got a big spike on it today right there. Check this out. And with some just insanely massive volume. And as one of the traders put it, it looks like somebody didn't care how much they paid. They just wanted to get into the stock, and it flew on up there. But they would have, they sort of gave up their 10% yield. They bought up here at $10 when it dropped on back down to 9. But no, very very nice yield on the stock right there. And obviously just a lot of buying going in with it being named the top dividend stock. That's not brand new news though. So it's been one of the top stocks for quite a while, and this past month and a half, when it passed through the 9% yield mark, and Forrest made a big deal out of it. That gave it a little bit of an umph right there. But overall, just a really interesting spike. Who knows what's going on? I'm sure if we dug deep enough, we could figure it out. But not really a chart tradable event, right? So sort of a flat stock overall. I mean, if you like flat, then you may have found it. But or if you like flat with the yield, you may have found it. We'll go back. Let's look a little bit deeper on this one. We'll go back. We'll pull up the dailies and see what all we get right here. So got a little volatility, but nothing that major. Got a nice trend early on. This is where your money was. This is where you double your cash right here. Okay, November, right on into going right to this $10 mark through March. So you had about a nice 6-month trade or so there, and 5-6 months, and yeah, that was your double your money mark at this point. Now you're just holding on to something that's just oscillating between 8 and 10. And so you can swing trade it if you like. Swing trading over a period of 2 months. I prefer to swing trade over a period of 2 hours. But it is looks like it's done okay so far. And you had a big drop off. But look at that. There's some of these volume spikes you just definitely want to be aware of if you're looking at this stock. So right here, we get this massive spike right here. Okay, so going on. So that becomes a bit of a pressure. It goes, it gaps down. Does a run up right here, okay, and we get another big volume spike on a down day right there, okay, and so we can go in and we can say, big volume spike here, obviously these being like earnings announcements, big volume spike here, and then we got another one right here at this point, and with the big volume spike right there, okay, and notice the last volume spike, it became a magnet price. The market ran up and pulled back to it, okay, and bounced off of it. This volume spike becomes a magnet price. The market falls down, runs up to it, okay. See, this one, it spikes and runs up and pulls back and bounces. This one, the volume spike runs down basically to the last magnet price. Look at that, like right there, pulls back up and bounces off of it. So I would not be issuing a strong buy unless you're just in it for the 10% yield, 9% yield that's on the stock. So that'd be about the only reason you'd be in that stock right now, I think, unless, or if you're going to be playing like $1 or so, multi-month swing trade. So that's some quick stock analysis for you. But those big moves right there. I mean, it's had a nice run, so you definitely got to give it that. But at this point, is there a place that you can better put your money that might want to be the focus of the cash that's in your portfolio? Anyways, so a little bit different, but we'll catch up on the news next week. I hope you have a great day, a safe weekend. Stay tuned. We have another great show coming for you, and I will see you on Monday.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.